Hello, everyone, and thank you for coming to John's Weekly Tax Update. This is episode 78 for July 7th, 2023. As a reminder, we are just gearing up with the tax planning and investments theme for the month of July. We had our first webinar yesterday with AJ Reynolds. It's available on demand if you would like to see tax planning for the moderate income client. That one was completely free. Share it with your friends. You don't need to be a subscriber for usually one event per month, and that was this month's event. Our great lineup, AJ, Randy Adams, Amy Wall is doing 8 hours for us next week on investments, 1099B interpretation. I'm doing a few things. Mike Tullio is joining us for the first time this year. He just did some retirement planning for CSEA, and he's doing some for us as well, mostly on stock options and proper reporting. Jane is back. Primary thing Jane will do is pass-through entity tax, which we agree is an area of litigation probably coming up for tax practitioners. So please join us for that. Mike Garrison is going to do the Georgia pass-through entity tax. Portia is going to do the Minnesota pass-through entity tax. Eve Davis is joining us for the first time to do Oregon's pass-through entity tax, and Jane will do California. I will do New York. So the state pass-through entity tax classes are free to practitioners. We think it's that important. So spread the word to your organizations, to your friends, to anybody who's not doing PTET, or as some people say to me, what's that? No, guys, 30 states have it. You need to know it. We're making it free to any of you folks that are in anybody who wants to take any of the state ones. So probably most of you should take New York and California, but by all means, join us. Again, it's free to take the pass-through entity state programs. Nationwide Tax Forum registration is open. I will be at National Harbor, so we're going to schedule an event one night for everybody. At some point, I'll put up a poll, and you can tell me which of the nights would be best for you. I'm getting in the 7th, and I'm going to probably leave the evening of the 10th, but I will be there. If you haven't decided and you want to go to one, Danny Werfel, who I have not yet heard speak in person, will be giving the keynote address in Atlanta. I have to tell you, I was super excited that that I heard Commissioner Reddick one summer like 6 times. It's quite amazing. All right, coming up. Whoops, where did that go? Hold on, kids. This is why I shouldn't be in charge of things.
What are you doing? What can I help you with?
I disappeared with my...
I got you. You want your presentation?
Yes, please.
Why'd you take it down?
I didn't mean to. I meant to hit full size, and it gave me full-size John, not full-size presentation.
All right, bear with me 1 minute. You can fill the air.
Hello, everyone. Welcome. Oh, everyone is saying they can't get the handout either. So
the handout they couldn't access was from last week. All this week's handout is accessible.
Got it. Okay. Well, I just unshared and reshared July 7th anyway. Please bear with us. We will be with you momentarily. Yes, thank goodness for Nicole, although this could have been her fault. Shh. I get in trouble when I say things like that. Yeah, the one that says, fine, I'm reading the Q&A. Up, right. You got it?
Yeah.
All right. So, you know what I did? I hit remove and then lower right instead of full in the upper right. There we go. All right. So next Tuesday night, Frank Agostino's Federal Rules of Evidence in Tax Cases Part 1. Available here for free. You can watch it, earn 3 CE if you follow the rules, 3 NASBA CPE. If you'd like to come in person, I will be there in Hackensack. If you need directions, let me know. I'm going to go live. A number of other folks will be there live. So, and it gives you free pizza, and it's pretty good pizza too. So please think about joining us. If you've never seen Frank live, you have to have that at least once in your life. AJ is going to do his 2023 mid-year update. This is a goal Nicole and I have had for at least 2 years to get one done. And AJ is volunteered to do one this year. I think I cornered him somewhere and said, you got to do this for me. And I can't wait to see what his content is going to be. I think it'll be great. It is so great. It is going to preempt me next Friday. I'm going to be preempted. And instead of me, you're going to see AJ doing a mid-year tax update. We have added a annual federal tax refresher program to allow members to become annual filing season participants, AFSP. If you are a subscriber, this will be free. We've purchased a great program from someone else. Nicole will be teaching it, or it's available as a self-study. And I'm very close to doing a live event as well in New York if somebody wants to come sit for the 6 hours and hear us talk. So this is going to be an added benefit to subscribers, no additional cost. I think it's fabulous that we were able to make that happen for you. The annual International Tax Conference, 10th annual conference, is up and running with registrations. Nicole has the link in the top of the chat. And there is an early bird right now. So please, if you'd like to come, please come and join us October 30th, October 31st, November 1st, 1st, 2nd, and 3rd. Boot camp on the 30th. The fundamentals program on the 1st. Both of those days will be taught primarily by Rita Ryan, maybe with a little help from me if she lets me. And on our program on Wednesday, Marina Hernandez is back because we're in person, along with Ruth Matson. And Rita is going to do 2 hours on expatriation. The third day is going to be all planning. It should be a fabulous, she's doing the 962 election. Marina is doing expatriation. Fabulous that if you only want to come for one day, come for Wednesday. A lot of networking. It's going to be a great time. I leave after Frank's class on Tuesday for the Latino Tax Fest, their 10th anniversary as well. I look at what I've been able to do in 10 years and what the Lopez's have done in 10 years, and I'm embarrassed. Fabulous company, fabulous. If you get to Vegas or you want to go to Vegas, it's an inexpensive week-long program. They're also offering a fully virtual option. His entertainment alone is worth going, so I highly recommend it. COVID operations. So we mentioned last week that starting last week, they updated the notice on top of the COVID operations page. We're processing tax returns, payments, refunds, and correspondence, but we continue to experience delays. We're working hard to get through the inventory. I love that. Working hard. All right. So the numbers, 3 million unprocessed returns. That's down 300,000. That's a 10% drop in a week. That happens when the numbers get lower. 1.7 million in error correction, which is down 100,000. That number still blows my mind, right? People claiming dependents they shouldn't. People who I don't know what else it could be on a 2022 return that lands them in error correction. Just imagine if we get the advanced child tax credit back, what that number is going to do in the future. 1.3 million paper returns needing review and processing. That's down 200,000. Makes me wonder, are those 1.3 million trying to claim people who are already claimed? They're in the 1.7 million. I'm not sure what these numbers mean right now, that there's still that many paper returns, paper 1040s. Form 1040X processing, 1.35 million, down 40,000 returns. It's obvious that this is not their push right now. Their push appears to be getting 1040 returns out the door. 941 inventory went up to 71,000, up 34,000. That makes perfect sense because we're starting to see those returns that it's the end of the quarter and they know it's a zero, or they payroll is quote unquote done for the quarter. And that's normal in the third month of a quarter that we start to see the 941 numbers go up. 941X at 374,000 is down 63,000. Now you remember, Commissioner Werfel said earlier in the year before House testimony that they were processing 20,000 a week during tax season, and he planned to increase that to 40,000. I don't think since May he's had 40,000. I think he's been in the 50s and 60s. He had one banner week banging these returns out. Now, it's pretty clear that they're focusing on getting these things done, maybe to be caught up, maybe because of all the congressional complaints when people didn't get their money quickly, or possibly due to some automation. We're going to talk a little bit later on. But I think the goal was to get those returns done because they're out auditing them left and right now. So they're processing April submissions in the ITIN unit, which is pretty much caught up. It's where they were prior to the pandemic. Identity theft at 430 days to resolve, still mind-blowing to me. Form 8802, no update, 12-week, taking them 12 weeks. They're processing May submissions. That is a bit behind where they normally were. The IRS has a webinar coming up on the employee retention tax credit. The information is here. The link to register is in, there's a Word document which includes resources for today. So the link is in there. Don't worry about copying this down or trying to key it in. I think this will be a good webinar. First of all, it's 2 hours, which means they'll get to the meat of some of this stuff. And having heard the IRS subject matter expert speak now twice, once at the Agostino barbecue and once at the NYU controversy forum, there's a lot of quality information in there. I recommend you either attend this to get your 2CE or watch Frank's webinar, which we have available on demand, no charge, even if you're not a subscriber here. Amazing to me. So Freelance Isn't Free is now in a law in Los Angeles. And this is a law that came up here in New York City, which I thought was going to be pretty unique to New York City. May 2017, the law came out. It had been passed in 2016. So Freelancers Union went to the LA City Council and got them to pass, after 2 years of working on it, the Freelance Worker Protection Ordinance, which we're calling Freelance Isn't Free. The goal was that freelance workers in Los Angeles would be treated fairly, compensated promptly, and granted the rights they deserve. I know some of you are arguing, what do you mean? They're in business, suck it up, right? Well, we've moved to a freelance economy in some respects, right? So there should be some protections. So freelance workers, for purposes of the Los Angeles law, are defined as individuals or entities composed of no more than one person. Now, this is interesting. I could be an LLC, I can be an S Corp, but one person business. If I'm hired by a hiring entity to provide services in exchange for compensation, I'm covered. The covered person, though, can't have employees. So if I'm an S Corp, it's got to be just me, no assistant, no helpers. The hiring entities are those regularly engaged in business or commercial activity. So, Sally homeowner who doesn't pay her bill, probably we're not going to get some protection. But a business, somebody who's self-employed themselves hiring you, that sounds like they're regularly engaged in business. So there's an exception for app-based drivers for transportation or delivery services. I think that means that they don't want to get in the middle of, you have a problem with Uber, and I get that. Sadly, freelancers in the hiring entity must be located in the city of Los Angeles. This isn't a California state law. It's a city of LA law, not even a county of LA law, the city. But still, it's a start, and I think it's great. The legislation says that hiring parties have to provide written contracts for agreements valued at $600 or more, not optional. So if any of your clients are doing business in the city, they need to be issuing contracts to people for work they're going to do if they're contractors. So keep that in mind. Freelancers are entitled to a one other thing to that. I guess if I were doing business in the city, I would probably have a certification form that says I am or I am not a freelancer, right? I qualify or I don't qualify. I have helpers, I don't have helpers. Or I'd give a contract to everybody. Freelancers are entitled to a $250 award, not reward, but it says award, if the hiring party refused to provide the contract upon request. Man, I'd be all over town just trying to get hired. I'd say, oh yeah, I'll do the work for $601, even though it's a $5,000 job. How many of them don't give you that contract? I'd turn them in. Both parties have to maintain records for 4 years. Hiring parties cannot punish, penalize, or retaliate against somebody who files a complaint. That's supposed to be sue, not sure. I can sue you in court under this law, or I can report it to the Bureau of Contract Administration, Office of Wage Standards. I said, great, another new bureaucracy that's going to be a year or two figuring out who they are. Nope. It's existed since 2015 and enforces minimum wage, paid sick leave, and wage theft. So good infrastructure. They've added it to an existing agency that's already built out. Now, my question, does this cover us? So if I'm a tax pro and a business, let's face it today, everything is more than $600. What if they don't pay me? I think I can file a complaint if it's somebody who's self-employed or a business and I'm a solopreneur. I work from home. I don't have paid staff. I don't have help. So I think this is awesome for us as well. Additional work for your clients, but awesome for us. Sorry about that, folks. Let's try that again. All right. I just put this up for fun that AICPA and SEMA, right? That's the merged organization. They have a cannabis industry conference, $1,735 for 3 days. I got to tell you, in 2015, when I was running around the country, convincing folks to join us, at our full day conferences, CPAs were scared to death to touch this stuff. Today, man, AICPA is out there saying not only should you be touching it, we're leading you with all of this industry explanation. And nobody called me to come out. Okay. Cryptocurrency exchange Kracken. This is important if you do have any clients that have crypto, or surprisingly, you're going to find some who do. Cryptocurrency exchange Kracken, which has 4 million clients and $140 billion in trade activity, 2011 to 2017, has been ordered by a judge to provide information to the IRS about its users. The IRS has an ongoing investigation of Kracken for unreported tax by its users. So they've requested all accounts that did at least $20,000 of crypto trading in any single year from 2016 to 2020. Kracken has called this an unjustified treasure hunt in certain legal filings. They also argue that this exceeds the Coinbase summons. Now, this is exactly what Coinbase settled on. I think in 2015, the IRS wanted data from Coinbase, and they wrote this broadly written John Doe summons. John Doe summons is when we say, we know you've got this information, we don't know whose it is. And they asked for all the activity for everybody. Well, Coinbase replied back, yeah, okay, we want to help you out, but we have 500,000 records to give you. We think that's unduly burdensome. And a court agreed. So in negotiations and in one of the IRS's saner moments, they said, what if you gave us anybody who would have needed a 1099K, had 1099K applied at the time? And we thought that's where they were going to head eventually, with filings for crypto was 200 transactions and $20,000. So that cut down Coinbase to 30 or 40,000 reports. So I would be talking to my people, hey, by the way, if you've got any Kraken activity and it's not in the return, let's think about getting in a qualified amended return before the IRS either sends you a CP2000 or sends you a notice asking you what's going on. All right, so this is becoming the equivalent of the $80 billion that the Inflation Reduction Act gave the IRS, right? Every week, somebody's jumping on the train here. So previously, this has been Ron Wyden's whipping boy, but Amy Klobuchar of Minnesota, Mike Lee of Utah, you will notice two different parties. They both lead the Senate Judiciary Subcommittee on Competition Policy, Antitrust, and Consumer Rights. There isn't even an acronym for that, baby. Wyden has previously said he was interested in legislation to revoke the exempt status. So Klobuchar and Lee wrote a letter to the PGA Tour and LIV golf executives, and they've asked about a whole bunch of things. And I think when subcommittees and committees ask, it's not really an ask, that's like a papal bull. Gimme. So they want to know details of the structure. They want to know about the PGA's tax exempt status, how the deal is going to end the antitrust litigation that's already out there. Other lawmakers have started asking about tax-exempt status of other sports leagues. This is going to become a mess, right? So John Garamendi of California has introduced legislation to close the provision. No more sports leagues can be exempt. Now, the question becomes, is that going to only be professional? Are they going to look at the semi-professional? Are they going to look at the kids' leagues? I don't think so, but we'll see. Ron Price, the chief operating officer of the PGA Tour, and board member Jimmy Dunn are going to testify before the Senate Permanent Subcommittee on Investigations. So I think that has to do with Senator Wyden's inquiry. So we'll see what happens here. IRS was reminding us this week, and I think it's worth one last mention. Taxpayers, there's about $1.5 billion of 2019 refunds that are going to get missed. Normally, the deadline would have been around April 15th, but if you remember, 2019 returns were extended to July 15th-ish, so I don't remember the exact day. This year, so of course, IRS has previously issued guidance that said, yes, you get the extra time, you get till July. A 2019 return does need to be filed on paper, you'll remember, makes it a little bit more of a pain. IRS estimates the average refund might be $893. That's a lot of money. So I'm asking you, should you be reminding clients? We're going back and looking this weekend. Clients that filed an extension with us and disappeared, returns that are in my files, unpaid and not picked up. I might have both because these would have been e-filed and put in the portal, so are supposed to be e-filed. I'm going to go back and triple check, and I'm wondering if we have liability. So that, hey, the money's there and we didn't remind them for the 80th time or one final time. So what I think I'm going to do is I'm going to do a final call and a final email and say, haven't heard from you. You know this is still here. Now, maybe they filed. I don't know what they've done, but it's here. So one call, one email. And then if I don't hear back a reply like I filed elsewhere or you stink, whatever, we're going to mail out the return certified mail, probably around the 10th. Directly to the last known address of the client. And then even if that comes back to me in the mail, I'm going to stick it in the file. I tried to help you. I tried to get it to you. I don't have any liability here. And we save those things. I've got stuff going back to 2010 that came back to me as a certified mail. Probably I should weed through that box. All right. So this came up when I finally got a chance to read most of the ETAAC, the Electronic Taxation and Something Committee. And I gave it a read. And I found this little neat diet on the left-hand side, how big the Internal Revenue Code is. And occasionally you hear it's this big, it's that big. Well, 6,000 pages, 3.8 million words in the code itself. But there are a total of 1,300 federal tax products, 750 forms for covering 12 different tax types, 400 separate sets of instructions, 150 publications. So for fun, I took a look to compare the Internal Revenue Code to the different religious texts. Now, I didn't have time to do this because I barely have time to get this thing done. I'm literally sending Celeste the final slide deck between 2:30 and 3. And remember, at 1 o'clock, I do another call. So I get this out. Now, I asked ChatGPT 4.0, the paid version, hey, what do you think? Give me this list. And because it can be psychotic and make things up, I then took it and said to Bard, would you please proofread or fact check this for me? And Bard came back and said, why, that was very good research. I kid you not. And I can confirm all of these numbers. So just interesting to see where the code stacks up. And the question becomes, could something so much less important than these documents really need that much time and space? So again, buried in the ETAAC report were some of these recommendations that affect us and some statistics that I thought you might want to hear. So ETAAC report recommends the IRS prioritize the ability to e-file all 940s and 941s. And it's gotten more expensive to be able to do this, right? Intuit is through the roof on what they charge for monthly payroll. They ended PayCycle, the Intuit online accounting product. That's gone. So they want to enhance the handling of duplicate processing of 940s and 941s. I didn't know that was a thing, but recall that they are now scanning them and converting them to e-filed returns. The highest percentage of paper filed returns of all the returns they get are 941s and 940s. 50% of the returns. And I'm sure a lot of them we're filing a 940 and we're saying none, none, and none. We mentioned earlier this year, the IRS is proposing to end the 944 because of the cost savings. Same thing. That's only going to increase this percentage. And that's a bad joke. Our accountant's cheap. It takes an EA to be cheap. Now, the ETAAC report reminded us that 941s and 941X, can't be filed electronically. But we heard earlier on that the IRS is scanning returns that come in and converting them to their own e-file system, right? Why reinvent the wheel? We've invented a product that does OCR. The OCR formats it for the existing e-file systems, which is probably a pretty good use of their system. Now, is that why 941X returns are processing so quickly? I wonder. I'm trying to think about how I could frame that in a FOIL request to find out. There's a significant backlog in recent years for these forms, and I'm thinking to myself, well, COVID and the ERTC mills have sent an unprecedented number of 941X through the system. So actually, for all the things we blame the service on, this one might not be their fault. All right. Oops. Why won't... Sorry, kids. My presentation kind of stuck there. All right. So what do taxpayers care about? This was amazing to me. Taxpayers care the most about mailed packages, and I wonder if they're tax returns, medical questions, taxes, and the weather, in that order. This is a graphic from April 19th, 2023. Top 10 visited government websites in the 30 days coming out of tax season, right? This is from analytics.usa.gov. Very interesting what people are concerned about. All right, if you remember, we talked last year about tax pro accounts, which Mr. Dombrowski refers to as instant POA. And these are supposed to be used to automate the submission of powers of attorney. And if you remember, tax pros who want to use a power of attorney but not speak, actually, you can speak to the IRS immediately. You have to have a US-based CAF number. You have to have authority to practice before the IRS as an attorney, CPA, EA, enrolled actuary, enrolled retirement plan, whatever the A is for there. To initiate this, I have to have an active tax pro account, and I have to receive approval from my taxpayer. In other words, I go in and say, hey, it's like tax Tinder. Hey, I want to be your rep. And then the client logs in and says, I accept. Actually, it's like, what is that? Bumblebee? What's the that dating site where you have to have approval before they'll communicate with you? So, and no, I'm not on those websites. In 2021, there were over 780,000 individuals authorized to prepare tax returns. That's up about 100,000 in the last couple of years, which I find interesting. Or does that mean people just don't cancel their PTIN? 2021, July of 21 to December of 22, 18-month period. There were 284,000, 17-month period, tax pro account logins. That doesn't seem like a lot. I couldn't find out how many powers of attorney were filed with a CAF during that period. 18,930 POA requests were completed in that period of time. That's like 1,500 a month. That's not very good. 15, but that's also 15 accesses of the account per power of attorney. I don't go into e-services or tax help that much for any one client. If you read the message boards and speak to our friends in the industry, they don't like it. It doesn't work that well. There's issues with, the other party connecting, navigating it. And even in situations where both parties have said, I said yes, it never authenticates. So clients tell me it's difficult to log in and they have a resistance to ID.me. I had a school teacher the other day, needed a 990N filed, and she said, but I don't want to enroll in that. Can you do it for me? The answer is yes, I'm going to charge you for it, whereas I might have done it for free in the past, but now you're taking advantage of the fact that I have a 990N account. So ETAAC is saying that on tax professional accounts, the IRS should reimagine the taxpayer's experience and meet the taxpayer where they are. I guess that means on my phone app where it all fits on the screen. I don't know. Create features that will drive tax pro adoption. I have news for you. If the darn thing worked, I think most of us would use it because you don't have to fax the POA in. It's like if you remember back in 2012 and earlier where we had the ability to enter our own power of attorney. If we had the shared secrets, I'd be on a 1-hour hold waiting for somebody at PPS to answer. I'd key in my power of attorney during that period of time. It was great, and this would be great if it worked. Allow taxpayers to seamlessly share account information with us. I guess they mean a portal, which would also be awesome. And this needs to be scalable and secure. In other words, if it works, it better not crash if you get 100,000 hits a month on it. I think we said some of this. ETAAC wants the IRS to provide a portal for filers to upload original and amended 941X returns. I think this is brilliant. We hear so many stories about folks that I won't mention Marta's name, but filing 941s on paper where the IRS processes them incorrectly, especially when there's children as employees, right? And I think an electronic one similar to the 1099 portal they opened and similar to the 1040 portal they want to open, I do and similar to the W-2 portal Social Security has, I think this is a good idea. And if that 50% number of 941, 941X, actually I think that's the 940, 941 number, not even 941X, is 50% of them are paper filed. This is a great idea. Probably too, you could check the box final, so you could go in and do a dummy return and check the box final. I think it's awesome. It's a first step to mandating e-file of those reports. And in my experience, when New York State said, God, must be 7, 8 years ago, 10 years ago, that we're going to mandate that you have a New York State account and you log in and you do your sales tax online, I said, this is never going to work. It's not going to get adopted. And guess what? It works. It's adopted. If you have a religious exemption or you can prove you have no internet at home, they will let you file on paper. They have to mail you a form. You call in and request it. They've made it as difficult as possible, but it works. ETAAC wants the IRS to set it up as line-by-line input like the W-2 line-by-line input at Social Security. They want to authenticate filers using TCC 17.3. I didn't know what that is. TCC is Transmitter Control Center. 17.3 outlines how you authenticate. So in other words, they're saying don't go reinvent the wheel. Use our system that's there. And you know what that means too. That means they're going to have to switch it eventually to ID.me. All right. Alternatively, ETAAC wants the IRS to develop a way to download a blank form and upload a completed 941 image like a PDF. Now, I'm thinking that would be like the BSA e-file system for FBARs or whatever system they end up designing for us to file Corporate Transparency Act paperwork. So it's interesting what they're thinking, right? But of course, this is ETAAC making recommendations to the service. ETAAC wants them to deploy a public-facing dashboard. Now, before I get into this, we kind of have that under COVID, and they eventually recognized the COVID thing was a good first start. So they want something that'll be regularly updated. Well, the COVID page is now 2 weeks back, right? It's updated. It's 13 days old when it comes out. They want you to have expected wait times for customer support lines. I think the technology already exists for that because they're on some lines, they tell us that. Estimated processing timelines for tax returns and refunds. They can probably do that. They want to break it down into return types. I think that's like step 2. Let's get the basics up. Indicate the details of where the IRS is in the process. Example, IRS has 150,000 amended tax returns in inventory and is currently working amendments received in October and later. They're already reporting that on that COVID page that I look at. So this could work. Is it the best use of resources? Maybe, if it keeps people off the phone. ETAAC thinks the IRS should include weekly statistic updates with key statistics, including number of returns and inventory by type. Well, as I've said, where have I been getting my numbers from every week, right? The IRS also wants the dashboard to include the number of returns held in special processing. So I like it. All right, this is a little bit off the beaten path, but our clients call us on this stuff. This is out of Bloomberg. Federal student loan balance has more than doubled since 2010. Now, of course, 3.5 years of not making a payment and accruing interest means all those new students that went to school have been added. All that interest that is accrued and not paid has been added. So if you look 2020 forward is a big rise. We are at 1.8 trillion with a T dollars. Why did I bring that up? Well, SCOTUS voided SCOTUS, the Supreme Court of the United States, voided the president's $10,000 per person, $20,000 per person proposal to forgive student debt. That went away on June 28th. Numbers I'm seeing in several places would have affected 40 million families. So you only file 100 and some odd million tax returns. That's potentially 40% of your clients would have seen this. 20 million people would have had 100% of their debt relief. Wow. So that means 120 million people, or half the student loans out there, are less than $10,000 or $20,000. That's an amazing number to me. Now, the relief would have been about $430 billion to do this. And they said it exceeded his power. You know, my joke here is that is kryptonite, right? Chief Justice John Roberts wrote the opinion, and the majority opinion, it was a 6-3 opinion. And he said, no, it's not a question of whether they should do this. It's a matter of who has the authority to do it. The president does not have the authority to do it, so they had to vacate it. This is very similar if you think back to when the RTRP program came out. They said, you've exceeded it's a good idea, like PTINs were a good idea. They let that part stay, but they said otherwise, it's beyond your authority. This is Congress creates the law. You don't. Pre-pandemic, the average payment was $400. Now, I've spoken to a few people socially. Yes, I have the occasional friend who children graduated during COVID and they haven't made payments yet. And they're like, where am I going to come up with the money? And I'm just thinking, spend less. If you want this was a great, also in Bloomberg, the share of Americans with student loan debt as of the first quarter of 2023. So 35 to 49-year-olds, that's a lot of millennials in there, $636 billion. $99 billion are the folks that are probably still in school. Surprisingly, 111 billion people 62 and older. Good Lord. I'm sorry to hear that. So if you find that useful. Now, I won't bore you with this, but for those of you that are involved in the cannabis industry, you might be aware that IRC 280E says those involved in the trafficking of narcotics, which a state-level marijuana business is still in the business of trafficking narcotics under federal law. 280E says you can't get any business deductions at all except inventory, cost of goods sold, and no, you're not available for any credits. So in those cases, wow, that stinks. You pay an abnormally high amount of tax. Again, no, Congress never conceived, when they passed this thing in 1982, Congress never conceived of someone having illegal drugs that were actually useful. That would actually be a business. So House Resolution 2643 is the Small Business Tax Equity Act of 2023. You know, they can't call it the weed dealer tax break because people would get upset, but that's what it is. And this was introduced in the House in April, and I missed it. I just saw it when I was researching something else. This bill will exempt a trade or business that conducts marijuana sales that is in full compliance with state law. It will exempt them from 280E, which is, it's about time. Now, I couldn't get an image of this, but there are cardboard envelopes out there being mailed that look like from a delivery service. You've seen fake things like that. You know, it says Rapid Express or some nonsense, but it's really, it's sent bulk mail through the Postal Service. Cardboard envelopes ask people to send photos and bank account information to receive an unclaimed tax refund. And of course, so my question is, so is that really smart of you, IRS, to be sending out all these promotional things about unfiled 2019 returns? The envelope has a letter bearing the IRS masthead. and claiming the notices in relation to your unclaimed refund. The letter includes contact information and phone number that's not the IRS. I could not get a copy of this. So if anybody has a copy, your client brings one in, I'd love to be able to share it with us. So our friend Shirley Callahan had this in her newsletter. If you'd like to get into Shirley's newsletter, her email address is at the bottom. Her email address is also in this week's handout for resources. So Tax Notes, which is owned by tax analysts, the nonprofit, they publish an awful lot of research stuff. So they've made their federal library free. Deloitte is paying them something to sponsor it, but it's free. I have to tell you, this is a better choice than a lot of the things some of you are using to research. It's probably equal to Parker. I haven't used Parker in a few years, but what they're saying they've made available might equal what you're paying for with Parker, with the exception of Parker's editorial content. So it's Tax Notes is part of an extensive suite. Well, no kidding. You want us to buy other stuff. I'm sure occasionally it'll reference you to something that's behind a paywall, but daily news, analysis, research, and some reference tools. So as part of Deloitte's sponsorship, you can see the federal code, regulations, and a whole lot of other primary source documents that basically are publicly available in other places. So if it prints it out nice and pretty, I know we're going to use this for a lot of things. I'd rather have Tax Notes on there and promote it than CCH and other tools that we're paying for. So the link to it is there, and the Shirley's email address is there. Both of those should be in the handout, in the tool. Now, this is a fabulous tool. We've been playing with it. So bank statement to CSV for 50 cents a page. Upload your bank statements, and it produces a CSV that can be uploaded into Xero and QuickBooks. So yes, there's other tools out there that are based on your desktop. There's other tools out there that you pay for. A whole host of issues here too. Should you be redacting stuff? That's not for today, but it's awesome that you upload your bank statement. Yes, I redacted my name and the account number on mine, but you upload it here and boom. Oh, I thought I had the page there. It gives you a fabulous Excel page. I did not give you the link to this. Bad John. If you want to look at this, email me, but I will give you the link to this, and it was a fabulous tool. I got this from Facebook, and I get it every so often, and this one was the worst one. This one told me that they have restricted my business page due to a violation of their community standards. Now, I forwarded this to Facebook, to the phishing site. They never got back to me. Sure enough, though, this is a spam. And if I click that link, it's going to ask me for stuff that it shouldn't ask for. So stay away, right? Meta team is not sending you email. Personal sources of income tax. I'm not going to bore you with this. I thought it was interesting, some of these statistics, but they didn't account for COVID distributions. They're telling us $1.1 trillion in 2020 of taxable IRA distributions. Well, that doesn't take into account the non-taxable part, I think. So what's the value of the numbers? But they're pretty huge. And again, this was an interesting piece. June payrolls through the roof. 500,000 new jobs were created. And if you look, leisure and hospitality, construction, trade, education and health services, natural resources. 5% drop in professional and business services. Yeah, we know that, right? The big CPA firms have cut back a bit, right? But looking at Bloomberg, I'm just going to show you this diagram first. Shows changes in median pay. And why is this important? Well, people have moved. Maybe they've moved to your area and you're working with them, or maybe they are your current clients who have moved elsewhere. Some of these numbers are surprising. Oregon and New Jersey having a drop in median pay during COVID was mind-blowing, especially Oregon, because you can't afford to live in a tent in Oregon these days, especially Portland area, and yet they're saying median pay has dropped. Some of the states where it's gone up, Wyoming, North Dakota, South Dakota, some of that's oil-driven, but Utah, don't know where that comes from. Florida, all the New York people, the businesses that have relocated. But Alabama, right? We're going to get to that. So private hiring surged, layoffs slowed. Filings for unemployment have stayed low. U.S. companies added 500,000 people. We mentioned that. This is coming from ADP in collaboration with Stanford Digital Economy Lab. I think ADP gives them raw numbers, and Stanford cleans it up and makes some of it statistically viable or usable. All right. So job vacancies declined in May. The quit rate rose by the most in the last 9 months. So Stanford is asking, are workers confident in their ability to secure another job? Now, the labor market isn't always going to be this strong. Recessions happen. Comes from Nick Bunker, who's a research director at Indeed. What does this mean for us? I think it means it's still going to be tough to hire staff, but I do think that means more complex tax returns. Did I move to another state? Am I moving to where it's warmer and I can make more? Am I escaping New Jersey where my prices went up and the value went down? So post-COVID job market changes some of this geographical data. A couple of states surged. Alabama, 17% in that 2-year time period, which included almost all of COVID. Median pay for non-government jobs up 17%, a raise of almost $9,000 to $60,000. That moves them up to 13th from 33rd, right, in the rankings of states. Alabama is almost at New Jersey in terms of median pay. Also mind-blowing. New Jersey median pay has been falling. It dropped by about $3,400 over the last 2 years to $60,200. Again, ADP and Stanford is the source. I don't necessarily know what this means. I was talking to my friend's son, graduated high school last year, graduated in an electrical apprentice program at one of the trade schools. He's looking for a job. He's going to make about $20 an hour. He can't afford to rent a place. Maybe he can with a roommate. It's interesting that, where you can't afford housing, right, where you're going to live and work. Just interesting. These numbers are not adjusted for inflation, which had varied across the country in the last 2 years. They do show us, though, they do take into account rise of remote work and some of the incentives for industrial investment, like why are people moving to Florida? Florida is creating incentives. Massachusetts, only state where typical salaries exceeded $70,000. Now, I would have liked to have seen New York break out to the New York City metro area and the rest of the state, because they really are markedly different. Decliners in Connecticut, declining states, Connecticut, New York, California. 3 huge surprises, maybe not so much. If a lot of big jobs and people are leaving California to go to Texas and Idaho, what do you expect? Oregon had the biggest jump in median pay, a slump of more than 10%. Amazing. Nationwide, median pay was $57,400 last month, and an increase of 6.4% over last year. Now, last month's annualized increase is double the cost of living increase over the period. Now, of course, I couldn't get a definition of cost of living if they backed out, housing, transportation, and utilities or food. Well, that's the biggest component, right? And sometimes that is dropped out. Many U.S. workers are seeing their pay rise in real terms after falling behind. Is that true? Again, ADP's numbers are based on 25 million non-government workers. If you're not a subscriber, maybe you should be. $52 a month gets you unlimited everything. Over 200 new CE each year, about 300 CE available on demand. That's a lot of content for $52 a month, all you can consume. All right. Thank you for joining us. Let me just see if there's any questions in the Q&A. Any more info available on Free State PTET? Bill, I emailed you a link. I emailed all the officers of 10 different companies and nobody got back to me. But yes, I will send you that to you, Bill. All right. I see Melissa and Nicole are out of order in that response. You're welcome. Worth it. You're welcome. You're welcome. You're welcome. Donna says not just Portland. I guess it must be expensive there in Independence. The link didn't fool Kimberly. Thank you. Ellen has mixed feelings on student loan debt. Jackie, I shouldn't have to put all of my POA info if I'm logged into my Tax Pro account, and I should be able to see all the POAs on, not just one. I don't disagree, and I think California, you can see all of them. I don't disagree, but you get into disclosure issues, right? How is Intuit handling 941s? I believe that they are electronic unless you choose not to do them electronically, or if you don't have a PIN, right? You need that e-file PIN. Do you have to paper file 2019 returns? Yes, because you can only electronically file 2021 and 22. Although that may be different for business returns, but for Form 1040, yes. Yep. Jennifer released the Kraken. David does not like that the LA law. It's also in New York. Freelancing Isn't Free is also in New York. Ellen has a 2017 that was submitted last year that hasn't been processed. We had a number of non-filer returns where it was 22 months before they were processed. And we had ACS actually saying to us, well, let's get where all the other returns were in and one was straggling. They said, okay, that's fine. How much was it? And they took our word for it and did an installment agreement. Melissa, email me. What date? If you guys are asking international, October 30th, 31st, and the 1st, go to taxpracticepro.com and you'll see it there. It is there. All right. Everybody, have an awesome weekend. I'll be here, but it's nice out. It's sunny out. Enjoy the beach. Get out of the office. Good for your mental health. All right, everybody?